It is April 2026. That means we are almost back to earnings season once again. It also means it's allergy season. And I'm going to struggle through this alone through a stuffy nose. Casey is working on other projects for you. You will probably see her later this week talking about something like Viva Systems or something like that. But let's jump into a presentation on Circle Internet Group, ticker symbol CRCL. If you followed along with us since almost a year ago ahead of Circle's IPO, you probably already know Circle is responsible for USDC, the second largest stablecoin behind, of course, USDT by Tether. We've done a number of videos, a public blog post, and a number of articles over on Semi Insider about Circle and how a stablecoin works. I wanted to take just a few minutes and show you a few things I've been looking at now that we have Circle's first annual report. Along with that annual report, I also, of course, used Fiscal.ai. Our friends over at Fiscal.ai provide all sorts of fantastic financial tools that we use every day here at Chipstock Investor. We're going to be taking a look at a few slides that I put together from Fiscal.ai showing Circle's financials. This one here, total revenue, GAAP operating income, and then cash from operations from the cash flow statement. Threw that in here because the actual operating income skews negative for this year because of effects from the IPO. So we strip out the new issued stock, we get cash from operations that show the company is profitable and profits are still scaling. So great visual here from Fiscal.ai. Make sure to check out our special link for 15% off any paid plan, Fiscal.ai/CSI, here on screen or in the comments for the video below. Now, regarding this big jump in revenue this first year since Circle had its IPO, where is this revenue exactly coming from? Now, this is an important thing to understand. We've talked about this in some of the write-ups thus far, including the blog we did some months ago. Circle does enable digital payments. So you might automatically think, well, this is a blockchain, crypto-based disruptor or potential disruptor of Visa and Mastercard. And yes, perhaps it could be, but the actual business structure itself is very different. So in this next slide here, you can see reserve income, far and away the big revenue generator for this company. Big increase year over year, nearly $1 billion revenue in 2025 over and above what they generated in 2024. And subscription and service revenues and transaction services, just tiny little slivers there at the bottom. Those two revenue segments did actually grow quite a lot in 2025, but at this point, for all intents and purposes, it is reserve income that is generating all of the revenue. What is reserve income? Well, as we've explained before, Circle Internet Group essentially operates like a bank. They get customer deposits in exchange for issuing USDC for those customers to use in their own operations. So this next slide here shows you the USDC in circulation. This has a direct correlation to how many customer deposits Circle has, and therefore how much interest income it can generate, just like a bank. So you have to look at the balance sheet for Circle to understand the growth of this business as well as the financial health of this business. So USDC grew quite a lot last year, although it did stall out a bit there in Q4. And because the Federal Reserve did cut interest rates, this is another risk that you have to be aware of. Lower interest rates tend to lower a bank's income from interest. And you can see this reflected in the Circle Reserve Fund. That's where those customer deposits go. It's managed by BlackRock. You can take a look at this fund under ticker symbol USDXX. What's in there? Well, there's a lot of US Treasury bills and a lot of other short-term paper. You see a lot of these things listed on BlackRock's site for the Circle Reserve Fund as tri-party FICC. These are what are commonly referred to as repos in the financial industry. What is a repo? Well, it's a type of short-term secured borrowing instrument often used by large corporations and banks to help increase their liquidity as part of their day-to-day operations. And investors can go out and buy those and use them in a fund, especially where stability of the fund, capital preservation, and generating a bit of interest is the most important thing. Important to banks and important, therefore, to Circle. So if you're looking at this business, Circle Internet Group, this is something to be really acutely aware of when you're running your calculations on what the company can generate in revenue and profit. It is still going to be the Circle Reserve Fund, which has a direct correlation to the company's ability to grow USDC that is in circulation, as well as going interest rates, especially those dictated by the US Federal Reserve. But Circle's management knows that it basically operates like a bank, and it wants to be much more than that. It wants to operate more like a technology company that uses blockchain as a type of foundation for other companies. So late in 2025, they actually launched the testnet for their own layer 1 blockchain, Arc. Arc isn't just going to be a platform for Circle to have ICOs, initial coin offerings, to generate revenue from selling crypto tokens or crypto coins to investors and running these pump and dump schemes. Rather, like other blockchain companies that have started to emerge as actual operating businesses, for example, Figure Technology Group, another one that we have covered over on Semi Insider, Arc is going to be this foundation for Circle's whole operation. It will be its own blockchain that records financial transactions and data, for example, from Circle Payments Network or CPN, and helping its customers keep track of and manage their own payments systems based off of USDC. And there are a growing number of companies that are either experimenting or have launched some sort of service or app using Circle's services. They have some listed on their website here, some common names that you probably recognize: Coinbase and Binance in the crypto marketplace space, Solana itself, also a blockchain network, and some companies that are outside of the whole crypto industry: Nubank, Stripe, MoneyGram. You may have even seen some news late last year about some ongoing adoption and integration of USDC and Circle's blockchain from companies like Intuit. Visa has the capability for customers to settle their payments in USDC now. That is an ongoing project as well. And it was also announced that Polymarket would also be using USDC to some extent in its operation. So you almost get like a little roundabout play here on predictions markets with USDC and by owning Circle. So a growing number of companies experimenting with this blockchain, either USDC itself or the Arc testnet, which will have a broader launch and be available for developers to use later this year. Now, it's going to take some time for these other revenue streams from the payments network and other Circle technology services to make up a larger percentage of revenue, but you can see some of this stuff already taking place and announced in the Q4 2025 press release, as well as in the business description in Circle's annual report. But unfortunately, these other revenue items, besides just interest income from the Circle Reserve Fund, are still very small, very tiny sliver of overall sales, and therefore not really going to contribute to profitability anytime soon. And this is reflected in Circle's new guidance for 2026 and beyond. Other revenues, 110 million last year. They're expecting respectable growth, 150 to 170 million in other revenue, subscriptions, payments revenue for 2026. So that's great, but that's hardly going to put a dent in that Circle Reserve Fund interest income line item. And you can see embedded in the guidance, in the outlook, Circle continues to think that growth of USDC in circulation will continue to be the primary driver of the business, and therefore interest income, them operating basically like a bank, is what will continue to move the needle. As a result of this, the instability in the growth of USDC, questions around the Federal Reserve's interest rate moves. It looks like maybe they're going to hold interest rates where they are for a while. So that would be a good thing for Circle, at least for that component of the revenue. This is going to be a very volatile stock. It was down quite a bit earlier this year. We had a bit of a jump there in March, a nice little rebound, and then, of course, another sell-off again as of late because of the geopolitical tensions and uncertainty caused by the war in Iran. We're watching this one very closely. We still have a small position left over after we took the profit out of this one last summer. But even after the most recent sell-off, in this slide here, again from fiscal.ai, quite a bit of forward growth already priced into the stock at nearly 80 times based on analysts' expected earnings per share for 2026. Now, what exactly does that mean? Jump over and show you our Reverse DCF tool, data powered by fiscal.ai over on the Semi Insider Research dashboard. I'm going to use the estimate for earnings per share for 2026, which is actually a little bit over $1. That's Wall Street's expectations. I'm going to lower that down to just $1 and assume that's what Circle generates in 2026, $1 in GAAP earnings per share. That would account for a bit of dilution, some turbulence in earnings as they continue to lap the big IPO from last year and other geopolitical effects, macroeconomic effects. So $1, using that as a starting point, what kind of growth is baked into the stock price today? This is the scenario that I ran here, 22% CAGR for earnings per share over the next 10 years, and then a terminal growth rate of 6% after that. That is a fairly high CAGR for the next 10 years for earnings growth, but it is below at least the midterm guidance and outlook that Circle just provided at their Q4 2025 update, especially with their expectation that USDC in circulation would grow at an approximately 40% CAGR over a multi-year period through this economic growth cycle. So if you think Circle does indeed have a long runway of growth ahead of it, blockchain can be a foundational technology for financial services like digital payments and other applications on the internet, and sort of an alternative, you could say, to the cloud providers. Decentralized blockchain computing most certainly could be a way for companies to detach or hedge their reliance on the big cloud providers as that technology continues to mature as well. Circle might be interesting. This is one that we're going to continue to hold, and we'll continue watching it closely. And we'll be looking at other companies that participate in the blockchain market as actual businesses that use blockchain to generate revenue. I mentioned Figure Technology Group that we had a write-up on a few months ago. That's another one we're watching. The business is even more complex, even more complicated than Circle Internet Group's businesses. So that is one mark against them. But at any rate, here you have it, Circle Internet Group. Make sure you check out fiscal.ai/CSI for that 15% off. And we'll see you over on Semi Insider for more on the blockchain industry. Take care, everybody.